Welcome back to AlgoBot, your companion for understanding automated trading systems on MetaTrader 5. I'm AlgoBot, and today we're taking a close look at a pure price action strategy called Quasimodo Reversal. This expert advisor uses no indicators at all, no moving averages, no oscillators, no volume. Instead, it reads the raw shape of the market, mapping swing highs and swing lows to spot a classic reversal pattern that traps breakout traders. By the end of this video, you'll understand exactly how the pattern forms, how the strategy enters and exits its trades, and how every single parameter shapes its behavior. Let's get started. So what exactly does Quasimodo Reversal do? At its heart, this is a market structure reversal strategy. It works on a single time frame, the chart you attach it to, and it can trade any instrument you like, whether that's a currency pair, gold, an index, or a cryptocurrency. The engine behind it is beautifully simple. It tracks price as it zigzags between swing highs and swing lows, and it waits for one very specific shape to appear. That shape is the Quasimodo pattern, sometimes called the over and under, or simply the QM. It is a failed trend continuation. Imagine an uptrend that makes one final higher high, luring breakout buyers in, and then suddenly breaks below the previous swing low. That break of structure is the market quietly telling you that control has shifted. The Quasimodo reversal strategy recognizes that moment and prepares to trade against the failed move. Because it relies only on raw price, there are no lagging indicators to repaint or delay the signal. Every decision comes from the open, high, low, and close of fully completed bars. This makes it a clean, transparent system that is easy to study and easy to reason about. Who is this suited for? It's designed for traders who appreciate structure-based, price-action thinking, and who prefer fewer, higher-quality setups over constant activity. The strategy only ever holds one position at a time, and each trade carries a clearly defined stop-loss and a fixed risk-to-reward target. So the intent of every position is known the moment it opens. Remember, everything we discuss here is for educational purposes only. We're studying how the logic is built, not making any promise about results. The goal is to help you understand the mechanics so you can evaluate the strategy thoughtfully on your own. Let's walk through the logic step by step. The first job of the strategy is to map market structure. On every newly closed bar, it checks whether a bar a few candles back was a genuine swing pivot, a high that stands above its neighbors on both sides, or a low that sits below them. The number of neighboring bars it compares is set by the SwingLookback parameter. These confirmed pivots are then folded into an alternating zigzag of highs and lows, so the strategy always carries a clean skeleton of the market structure. Next, it inspects the four most recent swings for a Quasimodo. For a bearish setup, it looks for a swing high, then a swing low, then a higher swing high. That higher high is the head, and the first high is the left shoulder, and finally a lower low that breaks below the earlier low. That final lower low is the break of structure, and it confirms that sellers have taken over even though a fresh high was just printed. The left shoulder high becomes what we call the QM line. A bullish setup is the exact mirror image, built from a low, a high, a lower low as the head, and a higher high as the upside break of structure. Once a pattern is armed, the strategy does not enter immediately. It waits patiently for price to retrace back into the QM line and then reject it. For a bearish setup, price must climb back up into the left shoulder high and then close back below it. The retest tolerance parameter defines how close counts as a tag, allowing for imperfect retests. That rejection candle is the trigger. When the trigger fires, the strategy places its trade. The stop loss sits just beyond the head, the exact level that would prove the reversal wrong, buffered by a small fraction of the structure's size, set by the stop buffer percent. The take profit is placed at a fixed multiple of that stop distance, controlled by the risk-reward ratio. With the default of 2, the target is twice the distance to the stop. Finally, the strategy protects itself from stale setups. If price breaks beyond the head before the retest arrives, the setup is discarded as a failed reversal. And if the retest simply never comes within the number of bars set by expiry bars, the setup quietly expires. Only one position is ever open at a time, each tagged with a magic number. Let's read the actual MetaTrader 5 code on screen, just as you'd see it in the meta editor. At the top, we have the input parameters. These are the dials you can turn without ever touching the logic. SwingLookback sets how many bars on each side define a swing pivot. A larger value finds bigger, more significant structure, while a smaller value reacts to finer detail. Retest tolerance controls how close price must come to the QM line to count as a valid tag, expressed as a fraction of the pattern's size. Stop buffer percent adds a small cushion beyond the head, so the stop is not clipped by noise. Risk-reward ratio sets the take profit as a multiple of the stop distance. Expiry bars decides how long an untriggered setup stays alive, and lots fixes the trade size. Magic simply tags the strategy's own positions. Now look at the core signal block, shown here for a bearish Quasimodo. First, the code computes two values from the span of the pattern: toll, the tolerance band, and buffer, the stop cushion. The next line is the invalidation check. If the current bar's high pushes beyond the head, the setup is canceled immediately because a new high means the reversal has failed. Then come the two conditions that must both be true. Tag checks that the high climbed back up into the QM line within tolerance. Rejection checks that the bar closed back below that line. When both are satisfied, the strategy reads the current bid price as the entry, places the stop loss just above the head plus the buffer, calculates the take profit as the risk-reward ratio times the stop distance below entry, and finally sends a sell order. The bullish side mirrors this exactly, buying the retest of a left shoulder low. Let's bring this to life on the chart. We're watching price action only, no oscillator beneath the candles, just the market's own structure, with two dashed lines marking the QM levels. Watch the first sequence on the left. Price carves out a low, our left shoulder, rallies to a high, then drops to a lower low that becomes the head. From there it surges upward, breaking above the prior high. That break of structure to the upside confirms a bullish Quasimodo. Now price drifts back down toward the green QM line, the left shoulder low. As it tags that line and closes back above it, the buy entry triggers. The stop sits just beneath the head, and price climbs steadily until it reaches the take profit, completing the long trade. Now watch the second sequence on the right, the mirror image. Price prints a high, the left shoulder, pulls back to a low, then pushes to an even higher high, forming the head. Next it breaks sharply below the previous low, a downside break of structure that confirms a bearish Quasimodo. Price then bounces back up toward the red QM line, the left shoulder high. As it tags that line and closes back below it, the sell entry fires. The stop rests just above the head, and price falls away until it reaches the take profit below, completing the short trade. Notice that in both cases the strategy never chases the breakout. It waits for the trap to spring, then for price to return to the scene before committing. This is the essence of a Quasimodo reversal. And again, this illustration is purely educational. A clean, idealized example to show you how the logic is meant to behave, not a prediction of any real market. And that brings us to the end of our deep dive into Quasimodo reversal. We covered how the strategy maps market structure into swing pivots, how it recognizes the Quasimodo pattern and its break of structure, how it waits for the retest and rejection at the QM line, and how it manages risk with a stop just beyond the head and a fixed risk-to-reward target. We also read through the real MetaTrader 5 code and watched the logic play out on the chart. Remember, this video is for educational purposes only, and nothing here is financial advice. If you found it helpful, please like the video, leave a comment with the strategy you'd like us to break down next, and subscribe for more MetaTrader 5 strategy analyses. You can find more at www.algobot.live. Past performance does not guarantee future results. Trade responsibly.